It's the biggest industry that nobody wakes up thinking about. It's actually $110 billion in Canada and the US.
What's going on, guys? This is Aaron from Departures Capital, and I'm here with Joseph Nakhla, CEO of Tribe Property Technologies. Always a pleasure to have you on today, Joseph. How are you doing?
I'm great, Aaron. How are you?
I'm great. Excited to be chatting here on this beautiful morning. So, like I said, it's great to have you back. Can you tell us a bit more about everything you've been up to since we last had you on?
We've been busy. Tribe has grown its footprint. We announced a sizable transaction, an acquisition of a property management company in the GTA market, the Greater Toronto area. It's a market we've been looking to expand into, and we made a transaction there of what it equates to about 5,000 condos that will be added to our ecosystem here shortly. We've also been very busy with our quarterly results, which is something we're going to probably get into in a second. We're very pleased with our drive towards profitability as an organization. We're taking serious steps there. We brought in a fantastic new CFO. His name is Angelo Bartolini, a name that's very familiar to Bay Street through his leadership of 15 years as CFO of Altus Group. You may be wondering, what's a great CFO like that joining a small microcap like ours? He really sees us as really where Altus was, almost a decade ago, a small company and with massive growth run rate in front of it. So we've been busy.
That's great to hear. Busy is good. So the company announced third quarter results, as you mentioned. Can you tell us more about this?
Yeah, we had a really solid quarter. It's been our best quarter really since we've gone public in terms of improving our profitability profile. We've improved our EBITDA by almost 34%. We've grown our revenue by 6%, and that's even in the middle of dealing with some new construction that's slowing down a little bit, being pushed out 1 quarter or 2 quarters due to supply chain issues that still are in the market. So we're very pleased with that. We're also very pleased with the number of new agreements we've signed. To date, we've signed almost 35 new communities to start using all of our solutions and start generating MRR for us, monthly recurring revenue for us. And just in that last quarter, we signed 12 of those 33. So it was a fantastic quarter for us, and that revenue will be reflected in Q1, Q2 of next year.
So Tribe was recently named to Deloitte Technologies Fast 50 and 500. First off, congratulations. Could you tell us more about this? What does it mean for Tribe?
Yeah, it's something we're really proud of. I'm incredibly grateful to the hard work of our staff. Really, where awards like that are built on the back of. Really, what this is essentially the fastest growing 50 companies over a period of. They look at your financials over 4 years, plus they also look at the sentiment of the business. So we were very fortunate. We were very small. 3 years ago, we were what they call companies to watch. You're not big enough to make it on the list. And then last year we were on the top 50, and then this year again on the top 50. I've been told there's only 10% success usually rate of repeating. So I'm very pleased with that. What it means for us, really, just recognition for the team in terms of us being able to grow. You got to put things in perspective. We've done this in the middle of a pandemic, in the middle of arguably quite a bit of headwind associated with people being able to deliver service. And we're thankful for being able to kind of not only navigate through these headwinds, but also be recognized as one of the top companies in tech in Canada, being able to grow at the rate we're growing.
Yes, it has not been an easy time, so congratulations on your accomplishment. And let's chat about real estate for 2024. Now, the real estate market, I know that there's talk. There could potentially be rate cuts on the horizon. I'm in the camp that is leaning towards there will be. I hope that there will be for many reasons. What are your thoughts on the market? I guess rates, and just where does the real estate market go from here?
Yeah, I mean, listen, inflation numbers and employment numbers are looking kind. So we're your sentiment is probably pretty well educated. Obviously, nobody's willing to to bet the home, pardon the pun, on any sentiment at this point, but it does look like the worst is behind us. What are we seeing when it comes to real estate? I think a lot of people are ill-advised just to take the headlines that you're hearing in the news, because there's always more and more to the story. I try to simplify things as it pertains to real estate by way of saying the following. Look, Canada's bringing in almost 1 million people a year. These 1 million people have to live somewhere. We're at the best year we've delivered is maybe 200,000 new homes. I'm not even sure we've done that in the last decade, but so that delta has to be somewhere. So in the rental space, I still anticipate quite a bit of demand on the supply that's available. I do hear and see and read that the government is working hard to incentivize either REITs or developers to build more rental properties. We're seeing that trend as well. I don't think the government moves as fast as I think us as consumers would like them to. It is a big cruise ship and it moves really slowly. However, there are indications that there will be more incentives for real estate developers to develop more rental homes, hopefully with some rent control that allows for some level of affordability through the equation. On the condo side is an interesting dynamic within the fact that there's still quite a bit of demand. However, with the interest rates where they are, average condo now is $800,000-900,000, and when interest rates are at 7-8%, the affordability and or the qualification to be able to purchase that condo varies. We all anticipate, this is well documented, that in 24-25, a lot of 5-year locked mortgages are going to come out open. I think that's going to put some downward pressure on the market. I'm not educated enough, nor am I in a place of a place where I can give a lot of advice, but logic says that will put a little bit of down pressure on pricing. As far as we're concerned at Tribe, it really doesn't make a big difference. We're seeing maybe some delays in the way developers are completing these communities. Buildings have to be managed. New construction that's already started has to complete. They need the services that we offer. So we feel pretty positive about the outlook in the market for us. But as far as real estate pricing, I think that's probably where, and real estate interest rates, I think that we're going to probably see some reduction in the next 12 to 24 months.
Yes, looking forward to that. So why is now the best time for someone, let's say they've been watching Tribe for a while, they're interested in the company, why is now a great time for them to take a closer look as opposed to, let's say, even 6 months to a year ago?
Listen, analysts don't lie. They can see how undervalued we are as an organization. We're trading well below one-time revenue, and we see a direct path to finishing next year with a run rate of almost doubling our revenue. We're growing like gangbuster. The industry is absolutely ripe for us to continue to make M&A and big transactional moves. And I've been there before. I was involved in many companies that were undervalued. You just put your head down, create a great business, and the stock will react. But I do think this is a fantastic time to get involved with us because of the tremendous value that we bring in, trading at a $15-16 million market cap, but a company is going to probably do close to $20 million in revenue and fast growing. It's a good place to be.
Well, it's always a pleasure, Joseph. Thank you for those updates. Best of luck with everything, and I look forward to having you back on very soon.
Thank you so much, Harry.